Start. Okay, we'll give everyone a second here to get in from the lobby. All right, let's get started. My name is Greg Burns. I'm the analyst at Sidoti here covering the presentation for IDT Corp. From the company, we have Marcelo Fischer, the company's CFO, and Bill Ulray, the company's head of IR. We're going to let them run through a presentation, and we'll get to some Q&A at the end. If you do have a question, just please enter it through the function in Zoom, and we'll get to as many of those as possible. So with that, I'll hand it over to Marcelo and Bill.
Great. Thank you, Greg. I'm going to run through the slide deck, and then Marcelo is going to take the lead on the Q&A. So thanks again to all the Sidoti team for putting the conference together. Excellent job as always. The slides we are reviewing today are posted and available for download on the investor relations portion of IDT's corporate website, www.idt.net, and through the Sidoti conference site. In our slides today, we'll discuss IDT's results through the second quarter of our fiscal year 2026, the 3 months ended January 31st, 2026. Please review our forward-looking disclosure statement. IDT is a New York Stock Exchange listed company. In fact, we're celebrating the 25th anniversary of our New York Stock Exchange listing later this year. So here's a quick look at some of our key metrics. We're firmly in the small cap space with a market cap currently at 1.2 billion. Unlike many other small cap companies, however, IDT is distinguished by its strong balance sheet and increasing profitability. Our balance sheet at January 31st had $246 million in cash and no debt. And over the past 12 months, we generated $143 million in adjusted EBITDA and $122 million in adjusted net cash provided by operating activities, both record levels on revenue of $1.3 billion. Our 1,950 employees are globally dispersed, but about a fourth of them work out of our headquarters here in Newark, New Jersey. IDT operates 6 primary businesses. The 3 high-margin businesses on the left side of the screen are growing rapidly and are the focus of investor attention. Collectively, they contribute over half our consolidated EBITDA, and they are National Retail Solutions, Boss Money, and net2phone. The 3 businesses on the right comprise our traditional communications segment. They include our growing IDT Digital Payments business and 2 businesses that operate within the declining paid-minute voice communications market, Boss Revolution Calling and IDT Global Carrier Services. In developing and operating our Boss Revolution and IDT Global businesses for over 3 decades, we've also built a core of strategic assets. These strategic assets have been foundational in the creation of each of the other businesses in our portfolio. Despite the diversity of the industries in which they operate, each of these businesses is, and in this sense, is interrelated. Moreover, each of the 6 businesses continues to invest in and strengthen one or more of the core assets, synergistically investing in IDT's long-term growth. And these core assets include our Boss consumer brands, our nationwide customer base of approximately 5 million consumers, our retail network of independent neighborhood convenience stores and bodegas, and our global telephony network. Today's presentation is going to focus on the 3 high-margin growth businesses, beginning with National Retail Solutions. Today, NRS is a provider of point-of-sale and payment processing solutions for small-format independent retailers, as well as for the advertisers and marketers who want to reach their nationwide multicultural retail customer base. NRS's recurring revenue, which excludes sales of its POS hardware, exceeded $37 million in the most recent quarter. 2/3 of that total was generated by payment processing services, primarily credit card processing, but also electronic benefit acceptance and other smaller services for retailers. Sales of advertising and data contributed nearly a quarter of NRS's recurring revenue. Each POS includes a customer-facing digital screen, and NRS sells its inventory of available advertising to buyers, including CPG marketers, through both programmatic and direct channels. The balance of recurring revenue, a little over 10%, was generated by the monthly recurring charges collected from our retailers for the software that operates the POS. Today, NRS operates over 39,000 POS terminals at 34,000 retail locations. To put this in perspective, the NRS retail network comprises approximately 30% more locations than Dollar General and Subway, America's largest retail chains ranked by location. Reliable data on the total addressable market is hard to come by, but based on the available data, we estimate there are approximately 200,000 convenience stores, bodegas, independent liquor stores, and tobacco shops in the US. So our current market penetration is less than 20%. We continue to add several hundred net new stores per month on average by leveraging our unique strengths in this market, including the strong NRS brand, our proprietary software and hardware built specifically to the needs of this market, and a sales force of several hundred experienced agents to help close the sales. Annualized recurring revenue at NRS has grown from $45 million annually in 2022 to $134 million in the trailing 12 months, increasing at a 39% CAGR. Growth has been powered by multiple factors, including expansion of our network to new retailers, increasing penetration of our NRS Pay branded payment processing services, the ongoing migration of customers from cash payments to credit card and debit cards, and increases in SaaS fees per terminal as retailers trade up from basic to premium software functionalities. These last three factors have driven strong increases in average monthly recurring revenue per terminal, which climbed to $325 in our most recent quarter from $310 a year earlier. NRS's bottom line expansion has outperformed as the business has scaled. In the trailing 12 months, it generated over $39 million in adjusted EBITDA for a 30% margin. We look to the rule of 40 for SaaS businesses as a key metric to evaluate growth and profitability at NRS, and NRS achieved an enviable 46% score in the most recent quarter. Now let's look at our next high margin business, Boss Money. Boss Money is our international money remittance business that enables our customers, primarily first and second generation immigrants in the US and Canada, to send money to family and friends back home. Like NRS, we built this business as a startup, leveraging our core strategic assets, in this case, our retail customer base that utilizes our international long distance calling and mobile top-up services, our Boss brand that is well established in immigrant communities across the US, and our retail and digital distribution networks, including our Boss Revolution calling app. We report Boss Money within our fintech segment. The fintech segment also includes smaller financial initiatives. However, Boss Money contributes a very large majority of fintech's revenue and income from operations. Boss Money is primarily a digital remittance provider. Almost 90% of all transfers now originate in either the Boss Money app or the Boss Revolution calling app. We work very hard to provide an outstanding user experience on our apps, and that effort has been a key driver of our success in the space. Because we are a digital-first provider, our growth profile historically has more closely paralleled rapidly growing digital money transfer provider Remitly, rather than the more slowly growing or declining retail dominant money transfer providers like Western Union, Intermex, and Ria. Our retail channel is a relatively small contributor financially, and we manage it to maximize gross profit rather than growth. Nevertheless, it continues to be an important gateway for customer acquisition. Boss Money has enjoyed exceptional success since its launch in 2013. The key growth driver has been the synergistic relationship that Boss Money enjoys with our two other retail offerings, Boss Revolution Calling and Boss Mobile Top-Up. By cross-marketing Boss Money to the larger customer bases of these two offerings, and by leveraging the strong Boss brand, Boss Money is able to effectively acquire new customers through both its digital and retail channels. Because we have been extremely successful at cross-selling, we're able to create exceptionally strong average customer lifetime value across the three Boss branded offerings. These synergies have helped Boss Money increase revenue at a rate well above its retail-centric remittance industry peers. While growth is slowing, revenue generated by Boss Money's digital channel still increased 14% in the most recent quarter. Digital transactions increased more quickly, up 17%, and digital send volume rose 29%, reflecting strong growth in the average amount sent per transaction. Digital revenue growth accelerated in January, the last month of our second quarter, to 20% after the new federal tax on retail remittances went into effect. We believe the tax will speed the ongoing migration of our customers from retail to digital, which will help our business continue to win market share in our key corridors in Latin America and Africa. Boss Money contributes the vast majority of the adjusted EBITDA to our fintech segment. Fintech adjusted EBITDA climbed to $23.8 million over the trailing 12 months on revenue of $165 million, while the adjusted EBITDA margin continues to expand, reaching 13.7% in the second quarter. Other players in this space routinely report EBITDA margins of 15 to 25%, and we believe Boss Money is positioned to further expand margins as it continues to gain scale. Now, let's turn to the last of our three high-margin businesses, net2phone. net2phone provides intelligent communication solutions to businesses. We built net2phone leveraging IDT's telephony network in North and South America and the professional staff we had in place across Latin America, selling prepaid international calling and SIP trunking services. Today, net2phone offers two core offerings: Unite, a unified communication solution, and uContact, a communication solution for high-volume sales and support teams. net2phone recently introduced two exciting agentic AI solutions: net2phone AI Agent, which handles routine customer interactions and associated workflows, and net2phone Coach, which helps organizations improve agent performance through sentiment analysis, feedback and coaching, and analytics reporting. net2phone has been able to maintain growth and profitability at rates higher than many industry peers, in part by building its business around three strategic differentiators. First, unlike the largest players in the space, such as RingCentral, net2phone focuses on mid-market and small businesses with less than 1,000 seats. Second, net2phone, in most of its markets, goes to market exclusively through technology service distributors and channel partners. Its offerings are designed to make it exceptionally easy for channel partners to provision and service net2phone offerings while providing agents with a very competitive commission structure. And third, net2phone has a unique geographic profile. It generates nearly all of its revenue from North and South America. Nearly half of net2phone's seats are in relatively underserved Latin American markets, where net2phone offers highly localized offerings and accounts are served by local staff. These three differentiators have helped net2phone achieve a 17% subscription revenue CAGR over the past 4 years. Subscription revenue TTM totaled $90 million. Subscription revenue increased 11% in the most recent quarter, and at the end of the quarter, net2phone served 435,000 UCaaS plus CCaaS seats. By the way, while seats served as a meaningful KPI for net2phone's UCaaS and CCaaS offerings, it is not applicable to its AI agent and coach offerings, which, once they become material, we will support by reporting account-based metrics. net2phone pivoted to generate positive adjusted EBITDA in 2023 and generated over $14 million in adjusted EBITDA TTM. net2phone's adjusted EBITDA margin reached a record 16.5% in the most recent quarter as unit economics continue to improve. It's worth noting that net2phone's reported levels of adjusted EBITDA include approximately $20 million in customer acquisition spend above and beyond what's necessary to replace churn. To wrap up, net2phone has successfully leveraged its key differentiators to grow revenue at double digits while pivoting to profitability. The introduction of net2phone AI Agent and Coach offer exciting upside potential. Now, we turn briefly to our traditional communications segment, a durable cash generator. The traditional communications segment comprises three businesses. The largest, IDT Digital Payments, is predominantly sales of mobile top-up offerings, but also includes our platform for prepaid B2B offerings, Zendit. The segment also includes IDT Global, our wholesale carrier services business, and Boss Revolution, our international long-distance voice business. Both of these businesses participate in the prepaid international long-distance minute industry, which is in terminal decline as free voice services like WhatsApp and others gradually replace it. Adjusted EBITDA generation from the traditional communications segment as a whole has been relatively stable over the past several years. IDT Digital Payments and Boss Revolution Calling are benefiting from the gradual migration of customers from lower margin retail to their higher margin digital channels. And at Boss Revolution Calling, we've introduced new higher margin plan-based offerings. These measures are helping to increase gross margins, which reached 19.2% in the most recent quarter, and fortify the segment's cash generation. Across these businesses, we continue to develop innovative new offerings, streamline operations, and reduce overhead to maintain consistent adjusted EBITDA generation. Now, let's take a look at IDT's recent consolidated results. IDT's accelerating top-line growth reflects the ongoing rotation from the large, low-margin traditional communications segment to our three rapidly expanding high-margin segment businesses. Our NRS, FinTech, and net2phone segments collectively increased revenue by 14% in the second quarter, helping to drive their collective contribution to 33% of IDT's consolidated revenue compared to 30% a year ago. We're still in the early stages of this rotation and expect to see the revenue growth gradually accelerate over time as the growth businesses become proportionally ever larger contributors to IDT's bottom line. Year over year, that same rotation dynamic is driving accelerated adjusted EBITDA increases, and that tailwind has been boosted further by the increasing adjusted EBITDA margins in our high-margin growth businesses. In the most recent quarter, consolidated adjusted EBITDA margin increased 40 basis points year over year to a record 11.9%, with the growth businesses contributing 56% of adjusted EBITDA, driving the increase to a record $38 million in adjusted EBITDA on a consolidated basis. Oops. To wrap up, IDT's financial results are increasingly reflective of our three exciting high-margin growth businesses, NRS, Boss Money, and net2phone. Their increasing revenue contributions position IDT for robust long-term increases in consolidated cash generation and profitability. That growth will, in turn, enable IDT to further fortify our balance sheet and to continue to return value to shareholders, both directly through our quarterly dividend and through opportunistic repurchases of our common stock. So that's it for the presentation. Greg, back to you for Q&A.
All right, great. Yep, thanks, Bill. Thanks, Marcelo. So maybe we could start off with in the money transfer space, how the federal tax has impacted your business, and then maybe we could just talk about any other things like blockchain that may have an impact on the existing ecosystem in that market. Thank you.
Sure. So federal taxes that you're referring to, for the audience, we are referring to the 1% new tax on money transfer remittances that are done using either via cash or money orders. That tax went into effect on January 1st. Now that we have about 2.5 months into this new environment, I could say in confidence that it has had a large effect on our business, a positive effect on our business. As Bill mentioned earlier, about almost 90% of IDT's money transfer transactions today are done via our apps, our digital apps, our Boss Money app, our Boss Evolution app. And as such, in order to use the app, you need to have a debit card, a credit card, an ACH account, so you cannot use cash. So we believe that as a result of the tax, more and more money transfer users are now testing and trying now different digital apps. We have seen a nice pickup in our digital apps transactions that were up 20% year over year in the month of January. We're up another 20% in the month of February. That continues now into the month of March. This past week was our second largest transactions week ever for Boss Money Digital, on top of another record the week before. So this trend is continuing, and we are picking up both digital transactions from what used to be our retail customers. We see clearly some of our retail customers migrating into digital, but we also believe that we are picking up retail customers from other money transfer operators. Our digital marketing spend has gone up. It's been successfully up. And I think all of that has to do with the fact that customers are transitioning into this new channel to avoid the impact of the 1% tax. In terms of blockchain stablecoins, we at IDT have used stablecoins for a long time already for purpose of our cross-border remittance payments in the Boss Money business to fund our payers across the globe. And we view some of the stablecoin operators no different than some other payers. And now we look at the cost that these cross-border entities provide for us in terms both of the FX and the cost of the per transaction. And if a stablecoin operator is able to give us a lower price on any transfer at any point, we will use them. So it's just one more element in our cross-border suite of vendors. I think what stablecoins can make more of an impact is not really on the cross-border B2B side, but eventually on the consumer side. Now we are working right now at launching our Boss Wallet here at IDT, first for the senders, eventually for the recipients as well. And once that goes into effect, yeah, there could be merit of senders sending a stable coin value to a beneficiary, and that beneficiary, instead of off-ramping it directly into the local currency, perhaps money to keep that stable coin value in the wallet until he needs to transform that into local currency, and that way better hedge for inflation or for devaluation issue that any beneficiary might be facing in any of the corridors in which they reside.
Okay. What are the difference in the economics between a retail transaction versus a digital transaction?
Yeah, so for us at Boss Money, I'll probably that's true across the money transfer operating industry. Our retail revenue per transaction is about double the revenue that we get on the digital transaction, and the reason is because at retail we charge a much higher fee to our end user, because about half of the fee then gets sent back to the agent who's processing that transaction. Whereas in the digital channel, we charge a much lower fee, and we make more money actually on the FX spread that we quote to our customers, because it's a little more less competitive in terms of FX on the digital side and on the retailer side. So we have kind of this dichotomy that on one hand, as digital becomes even a larger portion of our total transactions, it's almost close to 90%. Even if revenue doesn't grow as fast because of the lower revenue per transaction dynamics, but at the margin level, and then at the EBITDA net margin level, a digital transaction is about 25 to 30% more profitable for us. That's why in the latest guidance that we just gave, although revenue for Boss Money is increasing at a lower pace than we expected, we actually upped the guidance on the bottom line profitability for Boss Money because of this very reason. So we are quite pleased about these new dynamics.
All right. And then in the NRS business, I know you're not necessarily competing with like a Clover or Square in that space. Could you just talk about the competitive dynamics in that space and maybe what you're seeing there in terms of the market opportunity?
Sure. So as we've been saying now for a few quarters, I think that as a result, partially as a result of our success in bringing the premier point of sale operators for the independent retailer channel. And I've done very well with NRS over the years. I think that our success has bred more competition. We do see a lot more competitors across the country. These are small players, small operators who sometimes are pricing more aggressively than we do, despite the quality of their service not being at par with ours. We see some competitors being stronger in certain verticals in terms of some of the features. So we are reacting to this new reality. Now there is more competition from small players. And the way we are reacting is by upping the quality and the excellence of our offerings, being able to provide our retailers with better service, more features. The recent launch of our DoorDash distribution and the Grubhub, soon to come Uber Eats at some point. All of those things and features now I think distinguish ourselves, and we need to do a better job in focusing on some of the verticals, like the liquor vertical, the restaurant QSR verticals, in order to be able to provide more, vertically individualized services and features into those categories, so we could continue to grow sales at a fast pace.
Okay, great. And then on the net2phone side with the AI offerings, could you just give us maybe a little bit more like the roadmap there on in terms of how that business evolves, what the opportunities are for like agentic and other solutions like that? What are the revenue, the incremental revenue opportunities you see from some of these newer offerings you're rolling out?
Sure. So, as we mentioned in the presentation, we believe that they'll be incremental to our current offerings, UCaaS and CCaaS. And what we're finding in conversations as we begin to roll those offerings out to small businesses is that there's a tremendous hunger in that market, in the SMB market, for agentic AI solutions that can help with the most common workflows within the business. So net2phone is going to be transitioning more to focus on its AI offerings. It's going to develop a direct-to-market channel, which is new for the company today. It's almost wholly through channel partners in most markets. And so so the future looks more and more to be focused around agentic AI, heavily localized and designed specifically for the needs of the SMB market.
Okay. How does that change, like if going direct versus through the distribution channel, how does that maybe change the dynamics of the business, either from like an economic perspective or I don't know if you see that driving faster growth or what is the rationale for that?
Yeah, that's too early for us to be able to answer, right? And we are just working towards those business models. Now we have to test those business models at some point. But we do, and so far, I mean, the AI agent impact into our numbers has been minimal, right? We really just launched some of these products now into our regular channels. So we're probably going to start seeing more of an impact from both Coach and AI agent, and as we also build more vertical AI agent products, especially in hospitality, in the healthcare sectors. Now we'll start seeing more of that, as we go into our new fiscal year. We do believe that this direct channel opportunity may further enhance the speed of how we deploy it. Okay, but again, all of that, it all will depend on the execution ultimately. So it's early to say, okay, how big that impact can be.
Okay. All right. It looks like we're right at the end of our time. So just want to thank you, Bill and Marcelo, for presenting, everyone else for listening in. And with that, we could wrap up the presentation.
Great. Thank you so
Great,
much,
thank you.
Greg.
Thanks.